Here we go on the Growing the Future podcast, a Twitter lightning round where we have our expert, our guest on the episode, who happens to be Derek Squair, who's been the grain marketing coach at Abrahart Farms, working with my brother since 2006. We're going to ask Derek these questions directly from folks on Twitter that wanted to have these questions answered by a grain market coach. So this is as raw and as real as it gets, folks. So here we go. Devin Walker asks, before we knew we were in a drought, we had $20 canola, we had $7 wheat, we had $8 peas, we had $5 barley. Now with full on drought, we still have $20 canola. And the other crops have doubled. Was canola artificially inflated before, or is it artificially depressed now? There isn't 14.8 million metric tons out there.
So last year, we had an average crop, or slightly above average crop, and we had these amazingly high prices, and especially in canola took off. Where others they took off as well, but they were a little flatter than canola, and it was all about demand, and specifically Chinese demand. And so they had a production problem last year, had some flooding, some typhoons late August. So went through the whole growing season, thinking that, okay, everything looks all right around the world. And then they had some late production problems in their rapeseed growing areas and their corn growing areas, their soybean growing areas, and so some pretty crucial areas got hit with some flooding. And it like I said, happened in late August. And so we saw that in about November, December. We saw that demand really kick in, and it was unexpected demand that the market didn't expect. They had their sales projected off to different countries, and then when typically they bought about 2 million tons, or had China pegged in for a couple million tons, and they came in and bought about 4.5 million tons. So that's 2 million tons that we had to come up with, and the market had to come up with, and that's what, a bit of a squeeze on who's going to get what for canola. So we saw that last year. This year, different problem, right? Now you got production problem in Canada, and so the market's anticipating not enough canola this year, and that 14.8 million tons StatsCan number that just came out, I think it's going to come down as well. I think that's typically USDA and StatsCan's MO is they'll start at a number and slowly ratchet it down until they feel that they got the right number. So strange but true.
They certainly did.
Yeah, that's right. So it's a different problem this year. It's a production problem in Canada, and so that demand hasn't kicked in yet out of China, out of Pakistan, out of Mexico, out of the States, hasn't kicked in yet, but it will. And there's going to be some price rationing that needs to happen, especially if we go to a 12.5 million ton number or some version of that, 12.5 to 13 million tons. There's price rationing that needs to happen so that. Canola harvest is just getting started here now, so nobody really knows that number yet. I think by the end of harvest, the market will know that number, and then you'll start to see it react one way or the other.
Great background, very interesting. Question from Ron Cron: why does a market coach focus so much on cost of production? The market doesn't care about cost of production. Once decision is made to grow a crop where cost of production is absolutely critical in making that decision, the goal is to maximize dollars received within risk tolerance of grower. Mm-hmm. Derek.
So what, as I mentioned earlier, that we manage risk, and we need to know where that risk is. And as a guy helping making those decisions, risk reward. And so if we know that you're making 25 or 30% return on investment or $120 per acre, knowing that you paid all your bills and you still have $120 an acre left, then it's easier to check off the boxes. I guess we've got a criteria of things that we go through to know when to market grain or to pull the trigger. And if we're hitting those kinds of return on investments, it's okay to take a little bit of risk on. And so that's the balance that we do every day. So we need to know that number. I agree with Ron that it is about hitting the top number all the time, but we do need to optimize and not always maximize. And because maximizing and putting yourself at a lot of risk, especially on a year like this, is a lot different than optimizing and making sure that you don't get caught buying out a contract or something like that as well. So we're very careful with that on the risk reward, and you need to know all the information.
Good justification. I like it. Matt Gosling asks, your good buddy Matt, our good buddy Matt, how much new crop should one sell for 2022 after some hard lessons in 2021?
Mm-hmm. So I think that there's going to be contracts available to producers next year with act of God in them. I think that we've learned lessons on both sides. Producers and grain buyers are learning lessons from a year like this, 1 in 30 years, that for grain companies to get the producer back to the table to contract for next year, they're going to have to come up with more risk adverse contracts for producers. So I think that there'll be an act of God on canola at $22 a bushel, and to get producers to sign those, I would be looking for something like that next year.
Great to hear. There's going to be some improvements made after all the challenges this year. Mm-hmm. Ian Donovan asks, how high will spring wheat go?
Spring wheat is a different animal. It's I'll use durum or malt barley or things like that are, as an example of things that are made in Canada that are, if we are short in Canada, lentils is a great example. If we're short in Canada, the world's short. And where wheat's a different animal. To put it in perspective, we grow about 30 million tons of wheat, and there's about 980 million tons of production in the world a year. So, there is replacements for high quality spring wheat. There can be high quality or high protein winter wheat and products like that can replace it in the world. So it's really more of a domestic feed issue in Canada than it is about world international wheat price.
Kelvin Hanna asks, why do you enjoy staring at charts all day?
Well, I don't stare at charts all day. So there's technical, which is staring at charts all day, and there's fundamental, which is the practical supply and demand side. And so we balance both. And we're typically, I would say we're more like 65% fundamental, 35% technical. That the fundamentals, supply and demand, is really what is the macro moves in the world, and we've talked about production problems or increased demand, and that's really what drives long-term price. The technicals is really what drives short-term pricing breaks on the chart analysis. So we do watch technicals, but it's more short-term than it is long-term fundamental price discovery.
You mean you can't get rich when you have the proper candlestick formation and a crossover on the 50 slow moving average and a divergence on the MACD?
Yes, you can do all that, but
that was my
somebody
plan.
in China. Yeah, that's all good, and it works in your office. And then some guy in China says, "Well, I'm going to sell it today," and it throws everything out of whack.
Right. Or they got artificial intelligence computers playing against you, and they're going to take your money. Robert Breckner says, I love this one. Show me your previous years of sales recommendations.
Mm-hmm. So I like this one too. And I, you can't, this year is we're going to do good this year. I mean, there's going to be, it's going to be fine. But, the previous years, are really is the proof's in the pudding there. And I believe, I've been doing this for 15 years, and we've added money every year, and we've grown big farms into bigger farms, and a lot of the reasons that we are successful is we look at return on investment and the risk and reward. And in an earlier question on cost of production, it's about building on what you've got every year and not giving any back. And a lot of guys will shoot for the moon and they'll make a lot of money, but they'll give it back for 2 or 3 years after that. It's about building every year. And And that's really, the importance of having a good solid plan and looking at cost of production, return on investment, and growing it every year. So I'm proud to say that our track record's pretty darn strong, and I think Terry would attest to that.
Awesome. Rusty Stin asks, how do you cover your ass? Yeah, you know Rusty?
You bet. Agritrain guy.
Okay, good. I don't know Rusty. I've never met Rusty. Appreciate his question. How do you cover your ass when you do pre-sale and then come up short to cover the sale? Nobody knew it was you coming on the show, by the way. I just said grain marketing coach. How do you cover your ass when you do pre-sale and then come up short to cover the sale? What would have been the correct way to cover your position when you made the sale?
So again, use active gods as much as you can. That's not available for all commodities on a year like this. So active gods whenever you can. But what we did was, as if we made a sale at $15 a bushel for canola, for example, and then the market went to 16, 17, 18, we bought futures and covered our butts with that. So the money that you're making in the futures account is basically what your buyout cost is going to be to get out of it. So you're even at that point.
Sounds good to me. Sounds really good to me. Sign me up. Final question. You're going to love this one. Yeah. Jason Beck, BX Farms. Why would anyone pay for your services ever again?
Because it's a long-term thing. Like and I don't know, he must be caught short on a contract and be looking at huge buyout costs, because that's I'm assuming that somebody's helped him with that, and he got himself caught. Again, it's about risk reward. We're very careful about and maximizing revenue, but optimizing and making sure that we're not at hanging our butts out there. So, and it's a long-term deal. Like you might get stung on a year like this, or obviously he's getting stung on a year like this. But if you look at the history of the last 15 years, again, it's about building equity and not getting your ass out there too far. It's about just hitting doubles and triples and not swinging for the fences every time.
We probably should have asked Terry that, why he continues. And obviously there's been a lot of great long-term value there. And again, back to the original thesis of our conversation about coaching, sometimes even if a wrong decision is made, just making it with others is far better than making a wrong decision on your own.
Yeah, that's right.
It's a very lonely thing to be making decisions with all the money involved here. And I found that too. In the beginning of our business, I just charged ahead, much to the dismay of my other shareholders and various other people. Now it's one of those things where you take a deep breath, you sleep on it, you work with the experts, you don't do anything major without the buy-in of everybody. So if things go sideways, there's been all kinds of things on the farm. You were there. There's been times when they had $900,000 of hemp inventory they couldn't move to the market, and they had to get it, work with the bank to get it, registered as inventory and keep rolling, and frosts and a lot of that. I think Terry kept adding pieces that he knew would help in situations like that, to the point where I think the farm's in a very robust location, but it's all, geographically, as far as the whole landscape goes, on the war map, it takes a lot of management to get there. And he's been learning a lot. My dad, God bless him, loves to haul grain, on a Sunday. That's his jam. Working with advisors and getting other people's advice about what to do in life is not his jam. But my brother's, that's really been his mantra, and it's spilled over into our company. It's been awesome. So I look forward to the many ways that you're going to continue to work with Aberhart Farms, and some of what's been going on at Aberhart Farms obviously is going to translate hopefully into other opportunities for Aberhart Ag and all the producers that are listening to this show today. So where can people find you, Derek, if they wanted to hire you or ask you more?
Well, I can, my contact number, cell number is 306-435-9344. You can reach me at that. That'll start a conversation. So
pretty straightforward. Love it. Well, thanks for coming on the show, Derek, and keep up the good work. I appreciate it.
All right. Thank you, Dan. Appreciate it.
All right.